Good evening, everyone. Thank you once again for joining us tonight. We always look forward to a Thursday where we come here and learn together and find out solutions that do help our families and financially and our communities at large. Myself speaking, my name is Immaculate Businje. I'm a financial professional, licensed, residing in Dallas, Texas. I'm glad to have everyone tonight. I'll have my co-host to go ahead and introduce herself, and then we'll go ahead and get started.
Hi, everyone. Welcome again for coming. My name is Nyog. I also live in the Dallas-Fort Worth area in Texas. I am a licensed financial professional. I'm also a nurse outside of teaching finance. And I'm also like a mommy to an 8-year-old. So we're here today to educate you on something that you might not have heard before, and if you have heard it, maybe not have a lot of information on it.
Okay, so yes, thank you once again. I just saw new people coming in. This is going to be a great evening, as we always ask our listeners or our attendees. Please let us make this session as interactive as we can. Remember, we are financial professionals, but we do believe that we all, with all of us learning together, there is always something to share from you, from everyone, from our listeners, from everybody on this team. So tonight we're going to have a presentation, but after the presentation, we'll ask everyone to hold on your questions. We'll have actually a Q&A at the end. We'll be able to answer any question that everybody has. That's the reason of this actually discussion, because we want to make sure everybody who comes in here will not leave the same. So before Nyehok goes in actually with a presentation for tonight, because she's the lady who is going to be presenting tonight, we always have questions that come in at every session that we have. Like people who joined that last week, you saw how people wanted to keep going with questions because, of course, the presentations were very interesting and everyone always wants to know more about what we learned. So last week again, we had someone who was asking, because we did discuss different kind of products that we do have, again, because someone had asked that out there, the life insurances are too expensive, and they were wondering if there are actually some affordable ones. We were able to show people the different kind of insurances that we do have out there, depending on everybody's need or affordability. And then afterwards, someone sent a question actually after the presentation asking, so there was a discussion about the term life, and someone was wondering, why should I buy a term life if I have a group life from work? Because they were telling me it sounds like the term life is the same as the group life. So actually, every time before we start the real discussion, we always go back to make sure that even if we did not exhaust your question, at least we are able to elaborate on it before we start. So I'll go ahead, give me a second. I'll go ahead, actually answer that one before I can give Nyahok uh, the right to go on, and actually give me a second. Let me go ahead and share to answer that, and then we'll go from there. Okay, so someone was asking, they had like two questions they were asking right here. That one we actually, like, I was able to answer, but I think Nyehok will have enough clarification and clarity, which will throw more light on that. But let me go ahead and answer that one, the second one, because this one is within the presentation that Nyehok is going to touch. But the second question was, what is the purpose of buying term life if you have a group life from work? So we have always been actually able to shed more light on this one, to show people that these types of life insurances are actually totally different. As you can see, a group life, like someone was asking, is that kind of a life insurance you get from work, just through work. It's a benefit you get from working with a company that actually does offer that. But with that life insurance, you can only access it if the insured, which is you, the employee, if you die while still working at that job. Remember, a group life, like you have always explained, it is not your policy. It's not an employee's policy. It is a company's policy. A company ABCD will get a group life insurance policy under that particular company's name, and everybody, all the employees who are willing to actually subscribe to that, will be beneficiaries of it. Just in case an employee happens to die while still working with that company ABCD. Something else we always try to emphasize, the group life insurance does not come with living benefits, which is actually the crusade we are on, trying to show our people that it's not enough for you to have a life insurance if it is just a death insurance. The most important part of the products that we do offer from the Freedom Equity Group or the Fidelity and Guarantee or American General or all the companies we work with, they come with the living benefits, meaning that you can actually access your life insurance while you're still living. That is why they call it living benefits. You don't have to die to use that. I believe Nyahok is going to shed more light on that one, because you can get sick and access it. You can, you don't have to die. You can become your own beneficiary. So that is the difference. But when it comes to the life insurance, like the term life insurance, the one we have, but we have different ones. That one, at least, it covers you for maximum 35 years, depending depending how soon you took it or how old you are. Let me say someone from maybe year 1 up to year 45, you're able to get a 35-year term. That term life, I always tell people, although it's term, although you're renting it, it's not the best, but although you're renting it, at least with all those 35 years, you are 100% protected. Whether you get sick, you have the living benefit. Whether you die within those 35 years, you have tax-free death benefit. That is the difference. This one, the group life doesn't have the living benefits, and you don't even have you don't have a set of years you covered, because if you work for company ABCD for 5 years and you leave, you're losing the whole thing. But this one, the difference is you own it. You're renting it, yes, for 35. That's what they say. You're renting it. But within all those 35 years, you or your family are 100% actually covered. So I don't want to go through so many. I just want to show people those living benefits we talk about. All those are the living benefits that are covered under the term life insurance within those 35 years. So we don't push so much for one particular product, because we know there is a reason we have different kinds, but we want to show you that whether you take an index universal life that covers you for 120 years, 120 years, it has value accumulation, it has retirement benefits, tax-free death benefit. Whether you take a term life or index universal life, at least what both of them have is the living benefits, which are able to cover you if you have any of these critical illnesses or chronic illnesses, or you're not able to bathe yourself, to dress yourself, to take yourself to the toilet, to eat, help yourself eat, transfer yourself from one place to another. So that is the difference. You're able to get all these with the term, although you're renting it, but you cannot get any of this. You can never access your money if you just have a group life from the job that you do have. So I just wanted to go ahead and answer those, just show light on the difference between the term or the IUL with the group life. And then I'll go ahead and open up to Madame Nyahok. He's going to show us the presentation. Nyahok, the floor is yours.
Okay, thank you, Emma, for the explanation of those questions that we had last week. I hope that it clarified for those who were here who were wanting to know why is the group life different from terms, okay? So I am going to share my screen if everyone's ready, and then we're gonna go ahead and go through our presentation of why we are here today. Let's see. Okay, so am I frozen? Okay. Can everyone see my screen? Everyone can hear me?
Yes.
Perfect. Yes. Okay, so like I said, today we are here to learn together. You might have been invited by someone who were informed of this information or have heard of this information, and would like for you to also be educated on it. Like Emma was saying earlier, we're going to talk about mainly focus on the living benefits of the products that we have, right? We have multiple products. It's not just one product that we have. But essentially, what we're doing is we're protecting our families. We're protecting our financial future on anything that can happen in life. Okay, all of the what ifs of life. You have the account that you need that will um, take care of all these what if type things. Okay. So I'm going to talk about briefly about retirement, and then we're going to get into the living benefits and like life insurance, right? So essentially, all of us here in America, we know that we know and heard of 401k. This one, even an 18-year-old teenager probably knows about 401k. That is a retirement account, and it's like essentially if you are employed by somebody else, you know that they matches your percentage, and that's all you know is that okay, I'm putting out this money for whenever I do retire, I can take it out then. Okay, but it's not in detail of how is it how it will benefit you when you do retire. Okay, like for example, most of the money that we put in there, even if it's matched by your employee, participate in the market loss. So, which mean if one year our country ended up being in the negative as far as our stock market, your money is within that. So it obviously will go down with it. And when it do come up, it looks like your money came up to where you gained some, but if you were to think about it, you just gaining back what you have lost. It's not a surplus of what you had before there. Okay. So everyone knows about 401k, and you know that you have to pay tax on it whenever you do take it out at retirement. So you don't know exactly if it's going to be enough for you when you do retire, or will you go through it all and you would have to go back to work. I'm pretty sure a lot of us who are employed by any company, you have seen 60-year-olds, 70-year-olds who are still working. And it's not that they don't have 401k, it's just that maybe they took out their 401k, they thought that they had enough, they go through it, and you have to go back to the workforce. Okay. So we're going to talk about different accounts that maybe you can have on top of you having your 401k, because it's not bad to have 401k. It's a retirement plan. You should have it. In additional to, if you are educated right about any retirement account, there's plenty other accounts that might be better than 401k, or you can incorporate together with 401k, right? It's not bad to have 401k. If that's what you have, that's what you have. We only do what we know, okay, until we know better. So that's basically retirement. So scenario two is basically in life, we don't choose when we're going to get sick. We don't choose, we are going to get sick. Okay. Sickness doesn't have any color. It doesn't have any discrimination on anything. Especially if you have family history of, such illnesses, it can occur. So scenario two is if, let's say, you, you are working, you're an average person, you are the breadwinner of the house, and you happen to have one of the illnesses that we were going through earlier, in your life, right? What do you have, or what do you know of any account that you have that will help you while you are sick? So in America, millions and millions of people are diagnosed yearly with things like stroke, cancer, heart attack. I live in the healthcare, I work in the healthcare field. So all of this we see. It doesn't matter what age you are, even younger people can have any of these illnesses, paralysis. It can happen to anybody. As you can see, like average age of having any of these illnesses is 43. Some an age that is very, very young. Okay. So it doesn't choose who it's like you don't choose like whether you're gonna get it or not. It's a matter of when it's gonna happen. So we don't know tomorrow. Um, but let's say you have one of these illnesses. Let's say you have the cancer or you have the stroke. Um, we know that when you are sick, you cannot work. Okay. What do you have in plan that will replace your income when you can't work because you have one of these illnesses, you're down? Okay. How will you and your family, whether you're a husband, how's you and your wife and kids will be able to survive this trialing times? Do you have
Anna,
anything?
what would you like?
Do you have anything set up for something like this? Essentially 70% of America do not have anything set up. And most of them ended up being bankrupt because of that reason. When you're sick, you can't work, you don't have anything to pay your mortgage, you don't have anything to pay your food, um, clothing, shelter, in general, just the basic needs, okay? And that's why 70% of these people ended up being bankrupt by the next year because essentially no one has savings account or retirement account that will pay while you are sick and living and not gone yet. So we're going to talk about what we have, what product we have that can fix that can fix you being sick and your income being replaced while you're sick and recovering. Okay. Scenario two is you are gone too soon, meaning let's say you have one of those illnesses, you have a cancer or a stroke and you didn't make it. If you're gone, then your income is also gone. Okay. And that means your family doesn't have your income anymore to support themselves while you're gone. On top of that, grieving about the death, it's very, very, very hard on family. What do you have to where what account do you have to where it's like it can help in a situation like that, where if something were to happen, do you have something set up for your kids, your wife or your husband, your family, essentially, to be able to carry through this time that they are going to? So we're going to talk about life insurance benefits, how they are tax free, and it's basically you're getting like everything all in one. You're getting a life insurance benefits on top of it, and it's also like an investment. So it could take care of that scenario one that we talked about earlier. If you were to retire, how could you supplement your income? Let's say you're taking out money from your 401k, you retired, and you also have this kind of account where you're taking this money out tax free. Okay, so those are the things that we're going to talk about. Earlier, Emma went over term. Um, just like how she said earlier, it's a policy that you rent, and I'm pretty sure a lot of people have heard of a term like a life insurance. And when you hear of life insurance, you think of term, you think of something that I have, so that way, if scenario three happened to me, whereas I am gone, this will help my family members. Okay, that's what exactly term is. You renting it just like how you will rent an apartment. Once your lease is up, it's up. Once your term policy is up, it's up. So it's very expensive. The reason why it's very expensive in the long run, even though it costs less when you do get it, is because it's a term policy. So if you earlier Emma said that it's maximum that you can have a policy is 35 years, and I believe like the least you can have it is 10. So let's say you did have it for 30 years. You got it when you were 20, and it's very cheap. It's very nice. You can afford it, but and you're good for that period of time that you do have it. But what if nothing happened to you? Because you're renting it. Remember, you're renting it with that period of time. You went from your 20s all the way now you're 50. Nothing happened. So not and that's a good thing nothing happened, but because you're just essentially protecting yourself. But nothing happened in that. You know what happened? It goes away because you rent it. Now you have to re-sign again. But this time you're not signing at 50. You're not signing at 20. You're signing at 50. So it's expensive because between 20 and 50, you could have had some illness happening. You could have had anything happen. As we get older, things starts occurring. But not only that, now you're 50, so it's gonna insurance companies know that you're older now. It's easier for things to start happening. So term ended up being expensive. Sometimes triple what you paid before. If you were paying like $100, you might even be paying like 1,000 or 800 or 500, way more than what you were paying before. So that's what term is. And I think Emma did a great job earlier explaining it. That's exactly what that is. You're renting it for the period that you signed it for. And index universal is it's your own. You're not renting it. It covers your whole life. No matter where age you started it, it's going to cover you all the way till 120. Okay, so essentially is you own it. On top of that, it doesn't participate in the down part that the 401k participate in. So if the economy were to go down, the money that you're putting in monthly, it will level up. It will stay as is. Once the economy goes back up, then you basically making money off of it. It's a retirement plan that will it's a life insurance, but it also is an investment. That's the good thing about that. And it's tax advantage, right? Like meaning you take all this money when you retire or any money cash value you're taking out for free. Okay, so this is you own this one, it's yours. So about the living benefits earlier. So you want an account that will help you while you are alive. Okay, you want an account that will help you when you retire, and an account that will help you um, if you were to get sick, right? So we talked earlier about critical illnesses, like heart attack, stroke, and cancer, right? There's 7 additional more that are underlying as critical illnesses. But this is the best thing about having this an account is that, okay, what if I do have a heart attack? Okay. If you have a heart attack or you have a stroke, you want to be able to just um, trying to focus on recovery, right? At this point, you obviously are not working, okay? And that's when this living benefits become a crucial thing for you because then now you can use your account, whether you paid 1 month, 2 month, it doesn't matter. As long as your account is active and you have it, and any of that happened, month 1, month 2, this is your account. Now you're supplementing your income because you can't work anymore and your bills are still have to be paid, right? So this is why it's crucial to have living benefits on it. And another thing is chronic illness. Chronic illness is anything like where you can't perform any of our regular daily activities of living, where it's, we bathe ourselves, we feed ourselves, we walk, any of them, 2 of them or 3 out of those activities of daily living, if you're not able to perform them, your account is yours. But remember, you're still living, right? So you're still living. You're not getting the whole amount. But that's the good thing about having it, but still have an account that you're still looking forward to. So you will get your income and you will go ahead and pay all of your expenses from there. Terminal illness is any illness that the doctor tells you that you have less than 24 months to live. At this point, you will do the payout claim. And remember, many people who do have any of these illnesses, not all of them passes away, like we said earlier. 70% of them recover. Like I mean, 90% of them recover and they don't go on to pass away. So that's why we were talking about earlier that they become bankrupt because they are like they are still living, but they don't have anything to pay for. They don't have any money left to pay for their bills since they've been down. So what account do you have on you, or what plans do you have for your family? Any family members, any friends who do not know of this information. If you find it very helpful, would you not share it with your family, with your friends? And that's why some of you guys who are here, somebody who knows of it, have invited you because they want you to be able to know something like this exists. Whereas if you were to get sick, we have an account that can help you while you're down, while you're still like alive. You don't have to die to reap the benefits of this account. We have living benefits. It's not a death insurance. So those are like the critical illnesses that those are the living benefits that this account have. So you could pay a lot of things. You could pay medical expenses. You could pay your mortgage, college for kids. While you're down, you know you can put a good chunk amount on to your kids' college stuff. So how would you use your money if you were to have this illness and one of the illnesses right now? How would you be able to use that? How great it will be to have an income like that for your family members while you are recovering from your illnesses. So and a great example is Dr. John. Dr. John, out of all the benefits that this account have, Dr. John didn't really look into the reason why he got this account. He wasn't getting it because of all the living benefits that we mentioned earlier. Those are like secondary to him. His and that could be you too. Whatever the is important to you out of the list of the benefits that this account have, what is going to make you want to get it? Is it because of tax free, like Mr. John here, or is it because you don't know if you tomorrow, yeah, accidents can happen or you can get sick? Is that your why or your most important reason? With him, it's because if you know doctors, by the way, they are the most taxed individuals in America with what they do. So it wouldn't be surprising that John is wanting to have to tax advantage account has his number one reason for having it, right? But essentially, he got it because he wants tax advantage income. As you know, is one of the benefits that we talked about earlier. But within 1 month after paying into his account, he was diagnosed with throat cancer that now has gone away and he's cancer free. But guess what? He was paid this amount, something that he wasn't even thinking that was that important. His important reason is to have tax advantage. But guess what? His secondary reasoning ended up being the best thing that ended up happening is that he did end up getting one of the illnesses and he got his money paid out to him. And now he's cancer free, still working, but guess what? He still have his money with him. That's the power of having living benefits with an account that you would want to have for you and your family and your friends. So this is, oh, sorry. So this is where I wanted to stop here because I know that our time is up already. We're only 15 minutes away from being here for an hour. So I'm going to stop here and we can go over any questions that you may have, considering everything that we explained today as far as like this particular account and why it will be important for you and your family to have something like this. So thank you very much.
Thank you so very much, Nyehok, for that wonderful presentation. For sure, uh, it only comes to life when we see one of our own, like family members, friends, co-workers, actually getting through this kind of issues. So, you're presenting, they were saying, if you're sick and can't go to work, how will your bills be paid? Remember, these bills will never be compassionate with you. They will never wait for you to get better. Actually, when you sick, more bills are going to pile because not only your health insurance is going to pay your medical bills, but remember, there are some bills that medical insurance cannot actually cover because if you're sick, you need more nutritional food. Guess what? Your health insurance is not going to buy that. If you're sick and you have to pay your mortgage or your rent or put your kids to school, like Nyoka was showing us, that is not going to happen. So we're like, we're almost at the end of the year. We are all excited. We're looking into buying gifts for our families and friends and our kids. But can we think of something actually more tangible? Something more actually that has more, long lasting impact to our families. Can you think of? Because I know myself, I have children. They all have the shopping list, the Christmas list, but I feel like we need to look way beyond just some things that we buy, but really don't have that much of an impact to our families. Let's think about it. This is a giving time. This is a festive time whereby, like, actually giving and loving is actually more rampant here. Let's think about our families. Is your family protected? If something was to happen to you today, get sick, pass because that happens, will your family be covered? Or are we going to be putting a GoFundMe out there? Remember, GoFundMe has never been an option. It will never be a solution because it is not long lasting. Yes, we have a good culture, we'll put someone down, but the family is going to suffer. So let us not be just, wait for people to help us. Let us plan for our families because I know we're hardworking people, work hard for our families so they can live financial free lives. So let us plan so that those days when we're not there, those days that we don't plan for, if something is to happen, we're not going to be shaken. So this is the best time now we have the Q&A. I waited. If you have anything you put down as Nyahok and myself were presenting, please the mic, open your mic, ask anything. We always say these discussions are better when they are interactive. So feel free to come up. It could be something you want to add on, or it could be a question you've been having, or maybe you heard from your clients. They were asking you some questions like the ones we started with. Please, the mic is open. Let us know so we can give you a mic to ask anything. Go ahead and ask the questions, or you can actually write in the chats as well if you want to do that. It could be a question, it could be something you want to add on. Tonight, we're going to make sure that by the hour we close the session because we want to make sure that everyone is actually enjoying their families during this festive season.
Yeah, also to remember there's no wrong or right answer. It's what you don't understand. If you need clarification on something, it could simply be that. If you need clarification on something you have and you want to compare to, what we presented today, you can also add that as well.
If you only 2 minutes, if no questions, we'll let you actually leave because I believe Nyahok did a fantastic job. So if there's nothing to ask, someone is actually, I think, asking something in the chat. Let's see.
Yes, yeah, we're here every Thursday for sure. We educate on this on every week. So definitely, if you need more information, we can also set up an appointment and we can go over all of your questions as well. And also come back again next week or on Thursday. Anytime you have an invitation, make sure you come in and bring any friends that you think that might benefit from hearing this information that you got today. So yeah,
I think it would be better if she opened her mic and asked, is she at work?
yeah, she is at work. She's listening in. Yeah,
Okay. So
you
something,
want to understand more. Okay, yeah. We'll definitely get in touch with you. I'll get in touch with you. I know who invited you. I'll get in touch with you and we'll definitely set it up. But any questions, remember, you can ask based on what you've heard today, if need to.
and something you have to remember. So most of these sessions are like actually maximum mostly 1 hour. When we come here, we discuss, the main points. But remember, everybody who comes in here, they have someone who invited them. Feel free to go back, or even on the invitation we sent you, we do have our phone numbers, we do have our emails. Feel free to ask anyone. We are here just to learn. This is an educational actually plan we do have. This is the crusade we are on to make sure that our communities, our people are well educated. So don't feel actually left behind. Don't feel shy. Any question is valid. It doesn't matter. There's nothing as little as of a question. So feel free. You can write in the chat. You can actually ask questions later. That is why always when we start our discussion, we start with previous questions. So don't actually feel shy because we are here to learn together. We do believe that everybody's contribution is as good as everybody's. So yeah, go ahead and ask if you have more questions really tonight. We'll make it short. We don't want to keep people waiting so long. This is a festive season. We know families are waiting, shoppings are going on. But again, ladies, think more about what we shop and make sure that we're putting our families first.
It was good tonight.
Thank you, Mr. Roy. All right, so it looks like everybody's good. So we thank you once again. We thank you so much for your time. We do understand every evening after work, there's a lot to be done, but you choose to join us to that Thursday evening to learn because information is power. We know by learning, every time we learn something new, it improves our well-being. So let's keep learning. Let's keep educating one another. And I know, as we said from the beginning, this discussion is recorded. We're going to go back and share. If you missed or your friends missed, please share with your friends as well. We do understand that time can be tight in this evening. So share with your friends so they can go back and learn if you loved what you had. So thank you so much again for listening. Nyahok, you can go say the final remarks and then we'll let them go.
No problem. You have my phone number is on the flyer. Definitely call me, and we can set up a meeting for sure. Thank you everyone for coming. Glad you guys were able to make it today. I hope you learned a thing or two. And then we'll see you guys again on our next teaching or educational program on
Have a
Thursday.
great
Well,
evening, everyone, and happy
have a great
holidays.
one. Thank you for coming.